Breaking news for homeowners across America. If you just opened your mail and found an escrow shortage letter, your mortgage payment is about to jump by hundreds of dollars per month. Welcome to Oklahoma House Report. I'm covering the escrow shortage crisis demolishing budgets across the country in 2025. Homeowners are seeing payment increases of $200 to $500 monthly. Some are staring at shortages of $3,000 or more. Most have no clue why this is happening or what they can do about it. If you want urgent updates on the housing market and how these changes affect your wallet, make sure you're subscribed and hit that notification bell. By the end of this video, you'll understand exactly what an escrow shortage is, why 2025 has turned into the year of terrible mortgage mail, your actual options for handling it, and how to protect yourself going forward. When you make your mortgage payment every month, you're not just paying principal and interest. Most lenders also collect extra money for property taxes and homeowners insurance. That extra money goes into an escrow account. Every month you deposit money into this account. Then when your property tax bill comes due or when your insurance premium needs to be paid, your lender pays those bills directly from your escrow account. Why do they do this? First, it protects the lender. If you don't pay property taxes, the county can place a lien on your property. If you don't pay insurance and something catastrophic happens, they're stuck with worthless collateral. Second, it makes budgeting easier for you. Instead of getting destroyed by a massive property tax bill once or twice a year, you're paying it in small chunks every month. Most lenders require escrow accounts, especially if you put down less than 20%. The amount they collect is based on estimated annual costs for taxes and insurance, divided by 12 months. Notice I said estimated. That word is about to become very important. When the actual costs are higher than estimated, you get an escrow shortage. It means your escrow account doesn't have enough money to cover your property taxes and insurance when the bills came due. Your lender still paid the bills because they were required to, but now your escrow account is in the negative. You owe your lender money to bring that account back to where it needs to be. There's an important difference between an escrow shortage and an escrow deficiency. An escrow shortage means the estimates were off and you owe more going forward. You can usually spread the repayment over 12 months. An escrow deficiency is more serious and typically requires immediate repayment in full. Most homeowners are dealing with shortages, not deficiencies. What's causing the massive wave of escrow shortages in 2025? Several factors are hitting at the exact same time. Property tax increases are a huge factor. Local governments are reassessing property values based on elevated home prices from 2023 and 2024. Even though the housing market has stabilized somewhat, those reassessments are just now taking effect. In many areas, property taxes have increased 3 to 7% annually. If your property taxes went from $4,000 to $4,300, that's an extra $25 per month in your escrow payment. But the biggest factor destroying budgets right now? Insurance premium explosions. Homeowners insurance rates have skyrocketed 20 to 30% in many states. Florida, California, Louisiana, and Oklahoma are seeing the worst increases. Insurance companies are leaving certain markets because they've decided it's not profitable anymore. Weather-related claims are increasing every year. The cost to rebuild homes has gone up thanks to inflation and supply chain issues. Here's a real example playing out across America. Your insurance was $2,000 per year when your lender set up your escrow, but when renewal came in 2025, your new premium is suddenly $2,600. That's an extra $50 per month your lender needs to collect going forward. But your lender already paid that higher premium, so now your escrow account is short $600 for the year that already passed. Plus, they need to collect the higher amount going forward. That shortage gets spread over 12 months, adding another $50 to your payment. Suddenly, your mortgage payment jumped $100 per month with absolutely no warning. Flood insurance adjustments are catching people off guard too. FEMA updated flood maps in many areas, and properties that weren't previously required to have flood insurance now need it. That can add $500 to $1,500 annually. Initial underestimates are common, especially if you bought your home in 2023 or 2024. Your lender made their best guess at closing, but once the actual bills came in during 2025, the estimate was way off. Now let's talk about what happens when you receive that shortage notice. You'll get a detailed letter from your mortgage servicer showing your current escrow balance, the shortage amount, your old monthly payment, and your new monthly payment. The letter will give you options for handling the shortage. Option 1, spread it out over 12 months. The shortage gets divided by 12 and added to your new monthly payment. If you have a $1,200 shortage, that's an extra $100 per month for the next year, plus whatever increase is needed for the higher taxes and insurance going forward. Option 2, pay the shortage in full immediately. You can write a check for the entire shortage amount right now. This keeps your monthly payment lower because you're only covering the increased taxes and insurance going forward. Option 3, pay part of the shortage upfront and spread the rest over 12 months. Some lenders allow this hybrid approach. Which option should you choose? If you have the cash available and it won't completely drain your emergency fund, paying the shortage in full is usually the best move. But if paying it all at once would wipe out your savings, spreading it over 12 months makes more sense. You need to maintain financial flexibility. Here's something most people don't know: you can appeal your property tax assessment. If your property taxes increase significantly and you believe your home was overvalued, you have the right to challenge that assessment. You'll need comparable sales data showing similar homes in your area sold for less than your assessed value. The deadline for appeals varies by location, but it's usually within 30 to 60 days of receiving your assessment notice. A successful appeal can save you hundreds or even thousands of dollars. You can also shop for better insurance rates, and this is absolutely critical in 2025. Your lender requires you to have insurance, but they don't require you to use any specific company. If your premium jumped dramatically, get quotes from at least 3 other insurers. Make sure you're comparing equivalent coverage. Ask about discounts for bundling home and auto insurance, installing security systems, raising your deductible, or being claims-free for several years. Can you remove your escrow account entirely? Some lenders allow you to waive escrow if you meet certain requirements. Typically, you need at least 20% equity in your home and a solid payment history. If you remove escrow, you become responsible for paying property taxes and insurance directly. You need to be extremely disciplined about saving for these expenses, because if you miss a payment, your lender can force place insurance on your property at 2 to 3 times the normal cost. Let's talk about preventing escrow shortages in the future. First, actually review your annual escrow analysis carefully. Your lender is required to send you an escrow analysis statement once a year. Check the numbers against your actual tax and insurance bills. If the estimates seem low, contact your lender and ask them to adjust the estimates upward. Second, monitor your property tax assessments every year. When you get your annual assessment notice, review it immediately. Third, start shopping for insurance quotes 60 to 90 days before your policy expires. Fourth, maintain a buffer in your budget specifically for housing cost increases. If your mortgage payment is $2,000 per month, budget for $2,200. Fifth, build an emergency fund specifically for housing costs. Aim for 3 to 6 months of total housing expenses. What if you legitimately can't afford the new payment? Contact your mortgage servicer immediately. Explain your situation honestly and ask if they offer any hardship programs. Look at your overall budget with brutal honesty and cut expenses elsewhere if possible. Consider whether refinancing makes sense. Mortgage rates in 2025 are fluctuating between 6.5 and 7.5%. If you're truly struggling, talk to a HUD-approved housing counselor. These free services can help you understand your options. What you absolutely cannot do is ignore the problem. If you stop making payments, you're heading directly toward foreclosure. Let's talk about what's happening in different parts of the country. Florida homeowners are getting hammered. Insurance premiums have doubled or tripled in some areas. Escrow shortages of $3,000 to $5,000 are common. California is facing similar issues with wildfire risk. Louisiana residents are dealing with both hurricane insurance increases and property tax reassessments. Oklahoma is seeing significant insurance increases due to tornado and hail claims. Texas homeowners are facing property tax increases as home values soared. This isn't just affecting individual homeowners, it's affecting the entire housing market. Buyers who were pre-approved for a mortgage are finding out at closing that their actual costs are significantly higher than projected. Sellers are facing challenges because potential buyers are walking away when they see the true monthly costs. The lock-in effect is intensifying. Homeowners with mortgages at 3 or 4% don't want to sell and buy a new home with a 7% rate and dramatically higher escrow costs. Financial advisors are recommending that homeowners maintain larger emergency funds specifically for housing cost volatility. Mortgage professionals are suggesting that buyers should significantly overestimate their escrow costs when budgeting for a home purchase. Insurance industry analysts are warning that the current situation might actually get worse before it gets better. Here's the bottom line for 2025. Escrow shortages are widespread and affecting homeowners across the country. Insurance premium increases are the primary driver, followed by property tax reassessments. If you receive a shortage notice, don't panic, but don't ignore it either. Review it carefully and choose the payment option that makes sense for your situation. Take proactive action to prevent future shortages by monitoring your taxes and insurance costs throughout the year. If you're struggling to afford the increased payment, contact your servicer immediately. And if you're planning to buy a home, factor in potential escrow increases when calculating what you can actually afford. The housing market in 2025 is challenging. Mortgage rates remain elevated, home prices are still high, inventory is improving slowly, and now escrow costs are adding another layer of financial pressure. But knowledge is power. Understanding what's happening, why it's happening, and what you can do about it means you can make informed decisions instead of reacting in panic. Thanks for watching Oklahoma House Report. If you found this information helpful, subscribe for more urgent housing market updates and hit that notification bell. I'll see you in the next one.